Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with knowledge partners NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.
Welcome to Inside America's Boardrooms. I'm TK Kerstetter, the CEO of Boardroom Resources, and it's my pleasure to welcome you to the show. We're going to be taking a look at the key insights into the 2016 proxy season, and joining me to cover this topic is Paul DeNicola, who's the Managing Director of PwC's Governance Insights Center. Paul, welcome.
Thanks a lot for having me, TK.
So I know that PwC publishes a newsletter with Broadridge called Proxy Pulse that takes a look at the issues around proxy season and everything that happens. And in your feature issue, you look back at the study that both of you have done together that sort of highlights the 2015 proxy season. So in this show, we also want to take a look forward, but first of all, let's see what we've learned from the 2015 season. So give us a recap of what you found in your survey.
Sure. So the research that we did focused on what's called the mini season. That's the summer proxy season, not the typical spring season. So over 1,000 companies, this is data from. We looked at a number of areas. The first one is looking at ownership. Who actually owns U.S. public companies? And if you take a look at the split there between institutional ownership and retail ownership, it's about 62% institutional and 38% retail. So there's a little bit of a higher retail ownership rate because some of the companies that have their annual meetings during this period are a little bit smaller. So about 38% retail during this season. The standard season, you'd probably have about 28 or 29% retail. In terms of the movement and shifts in ownership, over the last 4 years, we've seen a move from 58% institutional ownership to 62% institutional ownership. So overall, you're seeing more of those assets being managed by institutions than your typical retail investors. When you take a look at the voting rates, who's voting their shares, there are pretty substantial differences between voting rates at institutions and retail. Institutions voted their shares over 80% of the time. Retail, on the other hand, only voted 28% of the time, 28% of their shares. So ultimately, what that did was it left 24 billion retail shares unvoted during that period of time. So a huge number of shares. But at the same time, it provides an opportunity, particularly for companies that are anticipating a close vote on one of their proxy issues, whether that's a say-on-pay vote or a director election or otherwise. Two other areas we looked at, one is director voting, the other is executive compensation. In terms of director voting, shareholders continue to be very supportive of directors. The average support for directors was 92%, small decline of 2 percentage points from last year. But again, shareholders very supportive of directors. There were some pockets of weakness. 125 directors actually didn't receive majority shareholder support, and about almost 400 didn't quite get to the 70% support threshold, which is a threshold looked at particularly by some of the proxy advisory firms and some institutional investors. So overall, on the director side, though, pretty high levels of support. On executive compensation, some of the same, although there were some pockets of weakness on compensation too. 8% of all say-on-pay votes that occurred during this period of time failed to get majority vote, and 1 in 5 of them didn't get to that 70% support threshold. So that's an area where it's particularly important for if companies are expecting a close vote on their say-on-pay vote, the retail opportunity to engage with their retail investors could be very fruitful.
Wasn't there some hope several years ago when the electronic voting opportunity came out for retail? Wasn't there some hope that there would be a big jump in retail, which we sort of haven't seen, it hasn't really worked like they hoped that it would?
We haven't seen a substantial difference over the last 5 years in retail voting rates, despite the move toward electronic, voting on your phone, mobile voting. Haven't seen much of a change there. Also, despite there's been an effort underway at the SEC to try to focus on how to engage the retail investor. There are some cases, particularly in the event of proxy contests and very close say-on-pay votes, where companies have proactively chosen to engage with this, to reach out to this particular group in a segmented way, where they've actually seen a spike in the voting in a particular proxy item. But it's really more on a case-by-case basis.
Yeah, I think we saw that in the DuPont Tryon case, where retail, they did a very good job of carrying the day in that, so to your point. So that's the past. That's what we've learned from the survey stuff. Now we'll ask you to put on your genie hat or your look in your crystal ball and sort of project. What do you see for the 2016 proxy season?
So we're right at the cusp of the season, and there's a lot going on. I guess maybe to start with, you have an aggressive shareholder activism environment that continues. If you take a look at 2015, there were over 340 activist campaigns in the U.S. That amounts to virtually one per day that was being launched. You have $173 billion in assets under activist management right now. And activist hedge funds are pursuing companies with fewer obvious challenges. It used to be that they would typically pursue companies that were struggling. Now hedge funds have gone after very successful companies. So I would anticipate that in the proxy season you see an increase in the number of proxy contests. We had a record number of proxy contests last season. You see an increase in the number of settlements in which an activist acquires a seat or multiple seats on the board. And I think that ultimately the demands that we're seeing in the activism space continue to be around share buybacks, around issuing special dividends, around restructuring. So I think to start with, activism will continue to be a big issue. A second issue that we see is around proxy access. Proxy access has had its breakout year. If you take a look back at 2014 and 2015, the number of total shareholder proposals for proxy access increased substantially. The New York City Comptroller and New York pension funds filed 72 proposals for proxy access this season. A number of other shareholders have filed proposals. But you're also seeing companies proactively adopt changes to their bylaws to allow for proxy access. Over 100 companies adopted changes last year. So I think on the side of proxy access, you're going to see an increase in the number of companies that adopt it. At the same time, there's a pressure that boards are feeling when it comes to their composition. Institutional investors, proxy advisors, others are focusing on board tenure, and they're focusing on board diversity. And what they want to ensure is that boards include directors with the right skills, the right diversity, and the right background. So I think nominating and governance committees are going to be under particular pressure in the 2016 proxy season to come to terms with whether or not the slate of nominees that they're proposing fulfills or addresses the needs that some of these stakeholders have.
The composition of boards is under a lot of pressure, not only from what you've said, but the skill sets that are required with shareholder engagement and the type of everything being so transparent. It is a big issue. The composition of a board is a big issue. To me, having the right chairs in place and then having the chairs in waiting in place. In other words, who's going to take their spots when it comes time for some kind of rotation or somebody retires. All that planning needs to be done where that was never really an issue in the past. You were thinking of CEO succession, but now you really got to give a lot of thought to the board succession as well.
And then the aside to that is how it's articulated to shareholders, how that process is articulated to shareholders. So, one of the other things that we're seeing in this proxy season is a real push for more transparency. So on board composition, clearly, the SEC chair, Mary Jo White, has said that the SEC is making board diversity and diversity a priority for the agency in 2016, and has hinted at the idea that they're taking a look at the disclosures around board diversity and whether or not those disclosures should be enhanced. So there's a push for more diversity disclosure. There's a push by some institutional investors for more disclosure around the board's refreshment program. That is, when the board does its annual self-assessment, how does the board use that self-assessment when it's thinking about its own refreshment in terms of the inputs from what they're gathering about director performance. And then the other two areas where there are pushes for additional disclosure, one is around the audit committee report. So stakeholders are asking for more in the audit committee report around what the audit committee's role is in overseeing external auditors. And finally, there was a highly publicized letter from BlackRock CEO around strategy, and Larry Fink asking for companies to be more detailed in discussing strategy and discussing execution against that strategy in their disclosures. So I think, whether it's composition, board refreshment, audit committee responsibilities, or strategy, these are all areas in which stakeholders are pushing for more information.
Yeah. Well, all that's great information. Sounds like another exciting season, to be sure. How can our viewers get a copy of the Proxy Pulse?
Proxy Pulse is a collaboration between PwC's Governance Insight Center and Broadridge, but we have a separate website. They can go to proxypulse.com to download this report and past reports. They could also find the report on PwC's Governance Insight Center website as well as Broadridge's website.
Well, Paul, thanks again for joining us. We always like to have your smiling face giving good information in the governance space, so thanks for joining us.
Thanks a lot for having me.
And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take a look at another critical topic that'll help you be a better board member or committee member. So we'll see you then. Thanks a lot.
Join us again next week for Inside America's Boardrooms. Brought to you with Knowledge Partners, NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.